Welcome back, everyone, to another Stock Market Open live stream. Today, really the only catalyst on the calendar is the UMich sentiment report, and we'll be able to take a peek at what people's sentiments are. Now, the good thing is, usually this doesn't move markets. It does seem like since last week, though, pretty much everything that is slightly good news is causing short covering and, frankly, the market just to go up. So that's been since roughly Japan bailed out their stock market. You had Japan bail out their stock market. Which created a lot of enthusiasm in America. We had good unemployment claims, good PPI, good CPI, no Iranian attack, and really some decent earnings, like even Walmart regarding the consumer. So some really just good news over the last week. It doesn't too much change my concerns over the building woes of a recession. But it certainly makes this market very, very interesting and volatile in both directions, both up and down. So we'll see how things progress today. But there really shouldn't be that many catalysts. Like I say, usually U of M does nothing. Let's listen in here for a moment. Let's see what they're yapping about. Ugh.
238,000, a big miss here. 1,238,000 seasonally adjusted annualized units would be the lightest level going all the way back to May of 2020. So that's way through the rear view mirror. And in terms of permits, we're expecting a number around 1,420,000, also on the light side. It's under 1.4 million at 1,396,000. How does that comp out? 1,396 would be the least going back to, we are now going back to June of 2020. So on the start side, that's about down 7% or near that, considering the revision now from 1,353,000 to 1,329,000, and about down 4% on permits. Saw that just cross the wires. So these aren't terrific numbers. And if we take it all in a macro view, I'm sure Hurricane Beryl, considering construction in the southern part of the country, may have indeed impacted these numbers negatively. And in terms of interest rates, well, if you're to look at a chart of the average 30-year fix, really started to move lower towards the end of July. A good chunk of that, of course, happening in August. So we'll probably see a bigger positive effect in the August numbers than the July numbers. And most likely we'll see the GPS get back on track and get some of those weather-related events out of this particular number. As we sit right now at 402 and a 2-year, that would be down 7 on the day, down 3 on the week. And we're hovering at 387-ish on a 10. Melissa, that's down 4 on the day, down 7 on the week. So we want to continue to monitor as the 10-year note right now is basically hovering unchanged for 2024. Back to you.
But what a ride. Rick, thank you.
Yeah, so this does some interesting things, right? When we get these treasury yields falling, which that seems to be the trajectory right now, right? We have these, like the trend, the larger trend. We have these beliefs that, we might end up getting some hot data every so often, and then these treasury yields will run up. I actually think days like that, when you get treasury yields that run up, it's just my opinion, it's not personalized advice, but it makes it interesting to consider buying the dip, potentially, it's something for you to consider, on treasuries, right? If you wanted to buy 2-year, 20-year, 30 years, whatever fit. Those hot data days seem to be interesting for buying the dip. Another thing is the mortgage companies. That's sort of a newer thesis that I have, but that's those typically, as mortgage rates trend down over time, Those seem to be something that that could increase in value based on people's speculation around the value of mortgages that are locked in at higher rates and potentially more earnings revenue for refinances. So anyway, those yields now down 5.5 here on the 10-year, and if I go jump to the 2-year, let's see here, 2-year down about 6.8. Okay, the 2-year is actually down more, so that's going to be a form of disinverting a little bit. Let's see here. Okay. Oh, BTC doesn't like that. Let's take a look here. So Bitcoin's really been struggling under the 60K level. I've been trying to find out why, but some people say has to do with liquidations by governments, but I don't know. It seems like you should be able to absorb some of those. All right, so somebody says Elon posted kiss kiss gun gun. What? It seems like the 5 a.m. Oh yeah, he did. The 5 a.m. posts here. I don't know what that means. Look at that. It's just arcane. I mean, that's what he wants. He wants people to go guess. Whatever. Okay. So, okay, very well. So what do we got in the pre-market? Let's see some movement here. So going back to, looks like 57,580 on Bitcoin. You've got IWM's dropping about 38 basis points. Nvidia's giving back about 1.7 in the pre-market. Maybe some profit taking here, given we've seen some nice numbers. Meta 0.94, ARM 1.1, Palantir dropping about 1.83 here. Microsoft rotating down a bit. Apps, Hood, Monday.com 0.86. Let's go take a look at just the broader. Let's go rank them. What's going up? So up. Let's see. Space Mobile, Ulta Beauty. Oh, this is not the pre-market. Hold on a sec. Why do I not have the pre-market open? There we go. Pull these numbers over. That's what I was looking for. All right. So Lumen, Space Mobile, ASML. These guys are down a bit. Space Mobile's just doing some give back though. Big move yesterday. Same thing for Sava. That moved like 20% yesterday. Palantir's over here. Tesla. Tesla giving back 1% here in the pre-market. Upside. Portillo's, hey, the hot dog company. That's funny. Look at that. Up 8% yesterday and up 4% in the pre-market. That was funny. Robin Hood. Up 72 bips there. All right. Interesting. Well, we'll see how some things move here. Let's see. Just going to listen to the news, but I haven't seen the president of Remax on TV in like forever.
And the broker can decide not to take my business
Look,
if I'm offering too little.
Agents provide a very valuable service.
Agents?
Compensated. It is up to them to articulate their value, determine what they charge for their services, and of course, it's up to the seller and or the buyer as to whether or not they want to pay their commission.
Amy, how long am I locked in to a particular agent or broker, if you will? Meaning, I sign up with you, I say, we're going to go look for properties. We look for a bunch of properties. I don't decide I want said properties, or I don't want them at those prices. I don't know, 6 months pass, something else happens in my life. I then want to actually go back and, oh, all of a sudden one of the properties is lower. Can I go back without that agent? Am I locked in for 2 years? What's going on here?
Ultimately, buyers need to ask these questions, and a quality agent will explain timeline.
Yeah, well, it all comes down to whether or not you sign a buyer's broker and what your relationship is with your buyer's agent, right? That's simple. Let's give the non-political, non-BS answer here. If you sign a buyer's broker, you have a time period. How long are you in a contract for? If you don't, not a contract. Then it's just a matter of, what's the right thing? You know, did an agent introduce you to a deal or not? Did they help you find it? You know, whatever. So, okay. That's a little boring. Let's see pre-market here. I'm kind of curious. So pre-market open here. When pre-market opened, we actually ticked up a little. But then it seems like you started getting some of that profit taking. Same thing on Amazon. Yeah. Amazon, Enphase, BTC right there at 57,580. Fascinating. All right. Let's see. Really, I don't think there are many catalysts right now between today and Jackson Hole, which is a week from yesterday. But I'm going to do a double check. Housing starts didn't miss by that much. 112, 280. I mean, what is that? 10, is it? Maybe like 9% or something like that. Let me see. I mean, I guess that's a way to miss. Let's see here. 12,380 divided by 133. Oh, okay. 7.1% on housing starts, and permits down by about 2.5%. Okay, got it. So, versus expectations. U of M expecting to see both inflation reads come down 0.1. That's the 1 year, and the 5 to 10. So down to 2.8, then 2.9. FOMC minutes, July 31st. And that's kind of it on the caddies. Wow, it's really boring. Let me try the earnings calendar. Let's see what comes next week. I do think, I think it's still 2 weeks away. It's like 12 days away for NVIDIA. Palo Alto Networks is Monday after. Okay, we should write some of these down. Track this stuff. Take a sec here. But September 6th. Oh yeah, you're going way out. I stopped at the end of the month. But yeah, you're right. We'll get new jobs reports. Oops. There we go. Okie dokie. Okie dokie. So, Bitcoin. Yeah, I don't know. You know, yesterday I remember somebody asked me, they're like, hey, you know, if we go into a recession, what do you think of Bitcoin? I'm like, oh, I think it'll sell off like a risk asset. But, you know, it's definitely harder to beta analyze it than I thought, which should have indicated more of a correlation to risk assets, but it kind of does its own thing. Okie dokie. So, let's see. Housing starts isn't a leading indicator. I never said it was. I want to be clear about that. I didn't even correlate the two. I don't think that means anything. That's why I'm complaining about lack of new caddies. But, you know, honestly, it's probably broadly good that the data we've had has been really phenomenal. Very, very good. So I don't think this data has been bad. Now, one thing, and I wanted your help on this. Maybe you can help me understand this one. Look at this. And I'm not trying to be the, you know, the bear or whatever. So this is HD drilling. What? What's going on with Home Depot? Oh, okay. Drilling a core. I never heard that phrase before. In reference to stocks. But look at this. So at first glance, I looked at this and I'm like, oh, okay, cool, 2.4% GDP. And I'm like, huh, we had really good data this week. Why is it 2.4%? Why it goes down on really those smoke and retail sales and some of the other data, which the release was based on yesterday, so it should include yesterday's retail sales. But anyway, take a look at this. This part made me a little confused. All right, so right here, the nowcast of third quarter real GDP investment growth. In other words, CapEx spending, right? CapEx is going to be machinery. It's going to be, factory material, investments into infrastructure, building out, an office, leasing a new space, whatever. Decreased from 2.8% to 0. What? So here I'm like, I'm trying to figure out, is this just like a volatile measure, or, because the first thing that made me weirded out was like, how do you have good data and the GDP forecast going down? But then I see investment growth decreasing to 0. I'm like, what the hell is this? Real gross, and it's like hidden in plain sight is, I feel like, what it is, right? Right here. It's not the bolded stuff. It's not the headline. It's hidden in plain sight. So domestic investment. I'm gonna try see what this looks like over time. So they're now forecasting this went to 0 for Q2. Now let's look historically. It seems like that does occur. It does occur outside of recessions. So let's try to understand this and go through it. So it definitely goes to 0 and under 0 in recessions, but it also does that mid-cycle. So definitely in a recession. Here's another mid-cycle, 67. Recession. There was a mid-cycle. And then recession. So in recent history, it went negative once over here in 2016. So it seems like 1, 2, 3, soft landing, no negative. Well, we're not negative either, we're just 0. 1, 2, 3, 4, 5, 6, 7, 8. In 8 recessions, that number's always gone negative. Oh, well, we could go back more. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 recessions it's gone negative. 1. I don't know if I could count that. Is that part of the pre-recession buildup here? Because you did have a recession within a year. I think if you had a recession within a year, it doesn't count as a false. So 1, this one I think is fair. Because this went negative like 2 years before. So I'll count that. I'll count that. 2. Oof. And then 3 over here. Well, and over here, Q1 23, 4. All right, so out of like 16 times, 70% of the time the number goes negative, you're about to go into a recession. Now that's interesting because, and again, the number has not gone negative yet, but it does make me wonder, like, why is that almost sort of like hiding over there? That's weird. So let's see what some of y'all speculate. Market is pumped synthetically. Okay. So it looks like we're going to retest the 100-day moving average, and if successful, we were going for all-time highs. Yeah, I don't think so, but okay. Still at 6% mortgage rates. Yes, 90% of buyers are waiting for rates to come down. Oh, with certainty. Okay. Listen, if you work at Cisco and you had Bitcoin and you got laid off, what are you going to do with your Bitcoin? Buy more? It's all fairy dust, Kevin. Yeah, no, and I see what you're saying here, Alberto, like bearish earnings calls, yet a bullish market. I'm telling. I'm bearish. I'm a little bear, and I'm sorry. I apologize. I don't want to be a little bear, but let me go. I want to write that down on this investment growth, because see, this investment growth number, I feel like it should be heavily propped up by the whole AI, explosion that we had. And so it's a little odd. Let's see here. Okay, I'm gonna write down of approximately 16 occurrences, real GDP investment growth went negative. Roughly 12 occurred right before a recession within a year. Roughly 12 or 75%. Okay. And then currently, my boss is not investing in new machinery, and I know my friends aren't investing either. I know his friends aren't investing either. Yeah, that's what I'm saying. Yeah, no, I agree with you, Chris. Heavy cash, and then all of a sudden you see the market do funny things. But that's where the market is just sometimes very irrational. Like I still maintain my bearishness. This actually makes me a little even more bearish. So yesterday I went to 2.9 on bull bear scale, which is still, very bearish. But this number actually just sort of reiterates what I'm feeling a bit, and I'm not looking for that validation. I was actually looking at the Atlanta Fed GDP because, frankly, I thought it was going to go up to 3%. I thought it was going to go up, and it went down. Atlanta Fed real GDP indicates 2.4%, but nowcast of third quarter real GDP investment growth decreased from 2.8% to 0%. I don't know. That's a weird one to me. It sort of just got slipped in there. Oh, don't mind this. Next GDP update is actually today. Oh, that's interesting. So you get another one today. What if? Oh, because of housing starts. Oh, well, if you're going to incorporate housing starts in this, it's going to go even lower. Maybe we can find out what factors go into this. NASDAQ talked about it. But that looks automated. They didn't really talk about it. Here's the nowcast. This only goes back to 2012. Well, the nowcast seems to be a little less. Oh, well, no, you had the 2026 fall. But it seems like it could fire a little early sometimes. That's interesting. That's good to know. Okay. So I want to see what they put in this as components. That's what I really wanted. Let me see here. I'm going to make a little note on that, though. Nowcast. Nowcast. Forecast. By Atlanta Fed can pre-fire more often. So I always get nervous though about CapEx spending actually going negative. This is just a forecast right now, mostly because that's what is an early sign of layoffs coming. Atlanta Fed real GDP. No. GDP private investment growth. That's what I want, and I want to see what components go into that. So usually at the bottom of these, they tell you. Wow, they really don't. They just want to make it hard. Yeah, I don't really want to go through all this right now. Oh well. Private domestic investment. I am going to cheat. I don't like doing this, but I'm gonna quickly just GPT it. Define United States, gross private domestic. Okay. Measure of the total amount of money in the economy invested in the economy by private businesses and households in a given period. Oh, it does include households. Reflects expenditures on capital goods that are used to produce other goods and services in the future. Business investments, residential investments, and changes in inventories. Oh, interesting. Inventories. Okay. It's almost like companies are wanting to plow through their inventories and then restock less. What should we call it? This measure includes residential investment, which would include then improvements and new builds. That makes sense. Changes in inventories and business investments. All right, that gives a little more color, because it could also be that it's kind of, I mean, after today's housing numbers, I wonder if that number would go negative, because the year-over-year housing numbers are, housing starts, wait, is that month-over-month? Hold on. Oh, okay, yeah, no, this is month-over-month. Year-over-year, month-over-month. The expectations missed by a lot, but compared to last month, we were down 6.8% on housing starts, down 4% on permits, and the prior stuff was revised down, as it always is. So the prior stuff was 3% on starts and 3.4% on permits, revised down to just 1.1 on starts, so a downward revision of 1.9%. And, building permits were actually moved up 0.5%. Oh, that's weird. So down 1.9 on housing starts. How do you miscount that badly? I don't know. That's some weird stuff right there. That's just weird. Investing with Brandon says, I came to your Vegas event. Can you shout out my new YouTube channel? Hey, everyone, check out Investing with Brandon. That's what Joe Biden's moving on to after he's leaving the White House. See, that's how you got to pitch it. All right. Gold just broke all-time highs. Is it really? Let me see it. Yeah, gold's up 76 basis points. You're at 25.11 right now. And then bonds came down, which will finally move TLT. You know, I might be too convinced, but I'm convinced as yields come down, TLT is potentially an interesting spot to be. Along with, I still think those mortgage companies, but I think you're relying on people refining. But as yields come down, I think that's an obvious one. Okay. I just hope yields come down rapidly, because I'd like to avoid a recession. And I think the way to avoid a recession is you start getting some serious cuts in here. Let me see what the projections are now. So it says Sherwin-Williams brought. So SB says Kevin should have invested in gold. I did a little bit. I've got a little bit of exposure to gold. Sherwin-Williams have brought their paint sale back up to 40% off. Nice. Would they raise the price like 50% first? So, okay. November. There, September. Pricing in 1.3 cuts. 2.5 in November. 3.8 December. Oh, Clarita's on. Let's listen to him. He used to be at the Fed.
Here's what I'd say. I would say on that. I do think there is, although it may be diminishing in importance, I do think there's some path dependence here in the following sense. The last 3 years, and I was a charter member of Team Transitory, the last 3 years, have not been kind to that initial call. All's well that ends well, perhaps. But I do think the fact that there has been an inflation overshoot for the last 3 years is a factor that's probably influencing at the margin both the timing of the first cut and the pace. And so I do think that could be relevant for some members.
It was transitory, Richard. It was just transitory.
Yeah. And notice I was a member of Team Transitory. I didn't say it would take 3 months or 3 years.
Right.
And so yes, you're
Richard,
right. Yeah.
Thank you so much for joining us, and we'll probably check back in with you again when Jackson Hole comes around next week.
Super. Thank you.
And a programming note here, we'll be bringing you a big slate of guests from this year's Fed Summit in Jackson
With this
Hole.
guy,
Steve
Leisman.
I didn't know that was my read. Sorry, Melissa. Thank you for
Professor
picking
is
me up.
going to be here.
I'm going to be out there, and we're going to have a lot of really smart people on from there, and we're going to be. It's about the transmission mechanism of monetary policy next week.
And you know what's going to be interesting also?
Whether or not they're fired.
We're going to have the overlay of the DNC convention happening at the same time, which I imagine will then get into the conversation.
I've got to check my notes as to whether or not that happened 4 years ago. I don't remember it happening 4 years ago. Or maybe the DNC didn't matter because it was Biden. I can't remember, but I have to go back and look.
Well, Powell's going to speak on Friday, so that'll be a big
Powell will
highlight.
speak on Friday, and that'll be right after Harris will speak on Thursday night. So you're going to have a lot to talk about.
Yeah.
For an August, right?
For an August. For
First
an
levels
August.
in the morning on the futures, by the way.
Enjoy this August weekend, folks.
Yes.
Melissa, thank you. Mr. Professor, thank you. Make sure you join us next week. Have a great weekend. Squawk on the Street begins right now.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Mike Santoli here at Post 9 of the New York Stock Exchange. Kramer in favor of the morning off. Pre-market.
Ooh, no Kramer. Pendle Property Management. I hear there are going to be a lot of beautiful women in Jackson Hole next week. Yeah. Got to get all the finance bros. If you want to know how Bitcoin will behave in a recession, you first need to predict how the global monetary supply will turn out during a recession. I don't know that I agree with that. I mean, I think monetary supply, it just goes almost one way always. You just print more, man. Low rates were one of the drivers behind every budgetary increase for multi-year projects. There is a need to have more infrastructure build, and this cannot be done if inflation is sky high. Okay. To ask ourselves, what would kill inflation right now? No cuts in September, just saying. Yeah. Sure. Keep it. Let's see here. Yesterday, Joe Biden said we'll have a soft landing. Well, good thing it wasn't Kramer who said that. Isn't that going to add to... No, not necessarily. This is a very interesting argument that you're making here. So, Kevin, if you're betting on a refinancing boom, isn't that going to add to consumer disposable income? So, I mean, yes, technically yes, but what is the propensity of spending that money? That's the question. So you have to, weigh that by like a fear factor, right? So let's say you have a house and there are going to be people in the situation where their house is worth $700,000. They bought it for $400,000 and all of their net worth is in their house. And they're in credit card debt, they're on unstable foundations with their job, whatever. So, like, you know what? Layoffs are coming. We smell the blood in the water. Let's refinance. So they quickly refinance before they lose their job, potentially. And then you stock up the money in cash. So now let's say you've pulled out, I don't know, what, 140 less 7 is 560 minus 4 minus principal paid out. You pulled out $200,000. So now the first thing you do is you go pay some credit card bills, some leftover bills you had to pay, go fix your, broken car or whatever. And then you sit in fear. That's a thesis I have. Who knows? Could be wrong. So, but yeah, I think inflation, frankly, is mostly dead. I'm not a big fan of believing inflation will be crazy. So bonds are not immune from risk. Remember that. Yeah, I mean, that's true because you could have these crazy sort of one-day spikes and they could even last longer too. So, yeah, it's very interesting. So you can, I think really for bonds to fall in value though, you need that second wave of inflation. And, you know, for me, I just sort of invest the way I see what businesses are talking about is going. So like, you know, I try to look at an earnings call and a financial report every single day. And I feel like if I could do that every single day, it, you know, hopefully gives a little bit of sort of a heads up. The question is just timing then around that and executing around that. It's not easy, and I'm definitely not perfect at it. But it's tough for me to look back and say, you know, oh yeah, here are companies that were just purely optimistic. I mean, it was mostly just Walmart. Everybody else was complaining. Walmart and Palantir. Palantir did pretty well too. You know.
It seems like the runway's clear.
And then the word robust being used a lot on retail sales, page one of the FT and the Journal today. You speak about Goolsbee, who's been obviously calling for cuts for a while,
Sure.
but did tell NPR specifically about the labor market that when you start to see rises in the unemployment rate, it often worsens quickly. Take a listen.
Yeah, unless there was. Didn't pre-COVID prove the Fed can quickly cut out of a recession, so why not hold higher for longer? Yeah, the thing is, they don't want to repeat COVID, where, you know, you basically flooded the market with so much stimulus, and then you really cause inflation. You know, I think the goal would be to try to gradually cut rates and try to prevent the recession in the first place. Oh, somebody donated $20. Very happy to see your video yesterday. I have 2,000 K LDI call. Oh, wow. Hey, well, good for you. Yeah. Basically, somebody's got calls in the mortgage sector. Yeah, I'm a big fan. I mean, I don't know what'll happen, you know, on the day-to-day. They're not like the most sexy kind of stocks. Some people are like, oh, they're ripe for a short squeeze. Other people are like, I don't know. Who knows? But I'm more looking at them as... that whole industry is basically just a very interesting, you know, an industry that just reported earnings, an industry that's reporting optimism and growth, and I don't know, you know, how the first rate cut will impact them, but there is this thesis that, and we saw this in an earnings call at one of them, that, hey, you know, the first rate cut might be the first advertisement or the best advertisement for people to go refinance, start calling their mortgage brokers. I thought it was interesting. It's not everybody looks at finance every single day. But it was, you know, usually the treasury market leads these companies. And so, you know, I'm kind of looking at this, peaking out on yields October of 23 and April of 24. And hopefully the trajectory now is just nicely down. That's really what should help. Hey, it's Tom Lee. Let's hear it all go to the moon.
Last week, was it
I'm going to get my coffee.
to keep your bearings in the midst of that crazy price action?
Without question, because the market had been whipsawed by data point to data point, as you guys were recapping. You know, the jobs report raised recession fears, big risk off. Then we got inflation this week, which was pretty tame, and I think markets suddenly went back to thinking about liquidity coming into markets. I think that the data dependence of the markets and the Fed is very tough for investors. And I think if you look ahead, I'd say we always know the summer is tough. Summer probably runs through October, but I don't think that anything's changed into year end, which should look pretty good.
But are you lower conviction now than you were 2 weeks ago?
No change in our conviction, but it is just recognizing August historically is a tough month for markets. I mean, one thing that maybe investors can be encouraged by is since 1928, the most common month for the summer low is August, and the most common week is the first week of August. So I think maybe the worst is behind us, but it doesn't mean we're straight up from here.
Right, and I guess the question is, I keep going back to, that moment in mid-July when we were at the highs. You were just shy of 5,700 on the S&P 500, and everything was a go. It was, the AI earnings path was kind of unquestioned. In addition to, general soft landing expectations, you kind of didn't have a lot of painful trade-offs to worry about in terms of policy or growth. Can we get back to something like that? I guess the idea, as you say, maybe summer lasts through October. Do you expect that we're going to have to continue to reset around these levels?
Yeah, I think if my best guess would be, it's still going to be a struggle, but we're climbing the escalator again. I think Jackson Hole is going to set a positive tone on balance, just because the evidence is growing. FOMC members want to be forward-looking, as you guys are pointing out. Data dependence is dangerous at turning points. And then we get the jobs report for August, which I think should reverse some of things that could be temporary. I mean, that's a guess, and if it is, then recession risk is sort of reduced. But now we have real rates are too high, and that means investors will be comfortable with cutting.
I'm thinking back to some of the notes you wrote after the last jobs number, and you looked at Hurricane Beryl and the number of companies in Texas that had no power for 2 weeks, and you do think August will be reassuring on the NFP print?
Yes, I mean, in some ways, the weekly claims is telling the story. We had a surge in claims, multi-month high, that have come down since then. And so even if someone says there was no effect from the hurricane, how do you explain claims really improving so much?
Right. Well, you explain it by looking at the state-by-state data and looking at California leisure, hospitality, and educational claims spiking to all-time highs. The Bureau of Labor Statistics said Hurricane Beryl wasn't the impact for claims in Texas. You got to look at the other states to see, okay, what underlyingly is happening. Okay, well, why would that happen in California? Oh, wow, it's actually a bad indicator. It's not weather related.
But small caps definitely got a flush, and yesterday they rallied big on that retail sales number. But it seems like that's still been a complicated attempt at a rotation.
Oh, that's right. They always say bottoms are tough, and bottoms are a process, and small caps are really in the process of what we think is a multi-year bottom. And so conviction is not going to be as strong as things that have been working. I think most people's toolkit is to buy the triple Q, the NASDAQ or the AI names when they want to get back in the markets. But cutting rates at a time when small caps trade at 10 times forward PE, better earnings growth, and then a visible path to easing, I would say it still makes sense that the risk reward is in small caps.
And then, we had a miss on housing starts this morning. So it's funny, the parts of the economy you thought you could rely on for a while maybe are giving way as other ones maybe start to bottom. But what's your thought there in terms of the flow through to the rest of the economy?
I think housing, auto sales, and durable goods are essentially in recession. Mm-hmm. It makes sense because cost of money is so high. I mean, it's super expensive and hard to afford a home or to buy a car with these rates. These are also directly benefiting from Fed cuts because adjustable rate mortgages adjust, business loans adjust, auto loans, credit card, they're sensitive to short-term
builders loans too. I mean, if you're building
that's
a house.
Right. Cost of money for builders, yeah. And so I think these really benefit from an easing cycle, but a market that believes there's an easing cycle underway.
How many cuts you think we get this year?
I'm looking at consensus, which is somewhere between 4 and 5.
Before the end of the year?
Yes.
So about 100 basis points?
I think that's right, but it depends on where inflation prints the next couple of months. But our base case is that we're on a glide path towards 2%. That's better than consensus. So I think 4 to 5 still makes sense.
And you've been, part of your thesis has been that elements of CPI have been falling, in your words, like a rock.
Yeah.
I actually saw that phrase repeated in another desk note yesterday, so that's spreading. But are you as assured of that? And when you look at things like car insurance or some of the coincident costs of owning a vehicle, as you point out?
Yeah, I think one of the things that surprises us still is that two things are keeping inflation high on a weighted basis: shelter and auto insurance. Auto insurance adequacy is there now. If you look at the results from these auto insurers, they don't need to raise rates, so I think that's cooling, and that'll come in the second half. And for housing, rent is stabilizing, and I think housing is going to cool. It just needs to get to 3 to 4%, and then markets will be comfortable that we're back at 2. But median inflation rate's still 1%. That's, below Fed's.
Well, I think as Greg Ipps said this week, rents are inertial. It takes time for those new rents to cycle in.
Yeah, that's right.
Tom, good weekend. Thanks
you
for coming
guys.
in. Great seeing you as always.
Yeah, I mean, it sounds pretty traditional Tom Lee, and, like I say, it is, like, I look at, House Hack as a small cap, right? So it's like, I don't want a recession, so, like, what we've done with House Hack is we've set up House Hack to whether or not we sell a single property, because we've delayed our mini funds a bit, mostly because we could then 1031 into them, which is a really cool tax strat. But what we've done with House Hack is we've said, you know what, let's assume there's a recession, because if there's not, that's fine. Then good, we're protected, right? Because if you plan for a recession, there's no recession. Then you don't go bankrupt, right? So we go, okay, let's assume recession. And what does that mean for us? We want to be profitable through a whole recession, and we want to have insulation. So what can we do to make this brand new company profitable right away? And so that's what we're accomplishing now. And so by the end of the year, we should be able to ride for the next years, actually generating profit. Not a lot, but I mean it's a brand new company too. But it's kind of cool. So that'll be really exciting. Can't wait to post some video updates about that. But there's a quick little sneak peek. So somebody here says the assumption should be no recession. The problem with assuming there's no recession is then people go out willy-nilly and borrow, and then they blow themselves up, Like, that's scary. Oh, Alex, maybe, but there are certain things that should not be spoken about at certain times. But anyway, so a popular yen carry trade that blew up spectacular 2 weeks ago is staging a comeback. Japan's currency has weakened more than 5% against the dollar since August 5th, when a cocktail of hawkish Japan policy moves, jitters around the U.S. earnings, and feeble jobs report catapulted the yen to a 7-month high. Nomura Holdings, Japan's biggest brokerage, has seen a variety of investors start borrowing the yen again to invest the proceeds elsewhere. The carry trade is just reinflating. Yeah, and then the Fed's gonna cut and Japan's gonna hike. Oh no. Phase 2. Bumble slips on downgrade. The Economist was just bagging on dating apps for a while. That was very interesting. Kyle says, most people don't follow you for House Hack, right? I don't know what people follow me for. I don't know what's in all your heads. I can't figure that stuff out. Hard landing different than a recession? No, a hard landing is a recession. I don't think insurance will drop. California insurance companies want to raise rates to compensate for fires and cost repairs. Yeah, you just got to get to where you have enough properties, and then you just self-insure. I'll be looking at the southern Miami-Dade area during a recession. Homestead, Cutler Bay should get hit. It's one of the fastest growing markets in the nation. Lots of competition if it gets hit up by a property there. Yeah, good for you. I know that area. I'd personally prefer like Davie and Weston, but that's me. Plantation. Sandy says, I follow for the short shorts. I got them on the end right now. No. Benner Cycle says recession 2023. I don't know what that is, but it could be. Recessions are really interesting with how slow they are, right? Benner Cycle. Oh, I don't know. I mean, you could also start a recession and be in the recession for a while, right? This is what you're talking about? Wait, where's 2026? Oh, there. Years of good times, high prices, and time to sell stocks of value of all kind. B, right here. Years in which panics have occurred and will occur again. Years of hard times. Low prices. Good time to buy stocks. Corner lots. Goods. Hold until boom reaches the years of good times, then unload. How interesting. In 1975, a book of forecasting. Yeah, I mean, this is right often, but then it's wrong often too, so I don't know if it's like a coin toss or what. Oh, wow, look at that BTC action. Honestly, I can't really... Like, I have not found Bitcoin to be reliable recently. It's really interesting to me. So, I mean, let's just look back, right? So we go to August 5th. Yeah, you get a little bit of a recovery here. But, I mean, the Bitcoin recovery was on the closed candlesticks. Close 61.3. 61.3 divided by 55.7. That's about 10%. But then you got rejected and started rotating down. QQQ did... What do we do over here? Let's see. Maybe it did predict it. 431. 474 divided by 431. Oh, it's also 10%. Oh, how interesting. Maybe it is working. Maybe it's just been on the day-to-day that it hasn't felt like it's been as consistent. Because like yesterday, Bitcoin felt pretty flat and the market was rallying, right? But look at that. Since the bottom, Bitcoin up 10%, Q's up 10%. Now you got Q's red in pre-market. Hey, United Wholesale Mortgage is up. Please go to the moon. Anyway, and Bitcoin, you know, Bitcoin got rejected. I mean, we're down. I know we're up on the minute candles right now, but 58,634 divided by the old number 61741 approximately. We're down 5% again. So theoretically, Bitcoin is signaling NASDAQ 450 again. I don't know, man. I don't know. Kevin, did you see Kamala's economic agenda? No. I heard something came out yesterday on it. Let me go look. Here, it's just a CNBC piece on it. I'll give you my raw reaction here. People probably get mad at me. VP will unveil a new... Oh, on Friday we'll unveil it. Oh, okay, but then they pre-leaked it. The policies are aimed to lower the cost of groceries and prescription drugs. How? Expand affordable housing, cut middle-class taxes. Groceries. In an effort to tackle stubbornly high grocery prices, Harris will work with Congress to advance the first-ever ban on corporate price gouging. Okay, well, how do you define corporate price gouging? Harris will pledge she will direct her administration to increase scrutiny of mergers. Really? That's it? You're going to scrutinize mergers. Yeah, block mergers. Okay. Is there anything else? Harris will single out the soaring meat industry. Proposals to bring costs down in prescription drugs and housing. I don't really see. I mean, all she's saying is we're gonna try to prevent mergers. And she didn't. There's no talk in here about price caps or anything, which is a very bad idea. But okay, whatever. She's branding like making corporate mergers harder as lowering grocery prices. Okay. Affordable housing and rent. Harris's plan would help cash trap renters by blocking data firms from hiking lease rates and preventing Wall Street from buying homes and to resell at a premium. Oh, that's open door. Harris will also call for the U.S. to construct 3 million new housing units over the next 4 years. So what's interesting is, like, first of all, Wall Street investors make up like 0.1% of home buyers. So I always think it's funny, but it's an easy political win to argue this. Harris will also call for the U.S. to construct 3 million new housing units over the next 4 years. Yeah, that should have been done a long time ago. This is not a bad idea. Incentive for builders who construct starter homes. That's not a bad idea. I'm not the biggest fan of getting the government involved in this stuff, but the government's already so much in the way of building homes. That's not a horrible idea, building starter homes. Any changes to the tax code require congressional approval, depend on which party controls. Yeah, of course. Provide working families who've paid their rent on time an opportunity to do $25,000 in down payment assistance with more generous support for first-generation homeowners. That's interesting. Again, not the biggest fan of the government getting involved, but okay, that's fair. A little leg up for people getting started. I'm broadly not horribly opposed to that. Like, there are worse things your government could spend the money on than down payment assistance. I generally am a big... Like, anybody that I've ever helped buy a home with down payment assistance, their lives have changed because of it. So, it's kind of cool. Harris would seek to expand Biden administration, cap on insulin, stiffer regulation, antitrust enforcement. So a lot of talk about antitrust. Restoring expanded child tax credits. Oh, this is copy Kamala again. Okay, because this is what J.D. Vance has been talking about, expanding child tax credits, and it's what Ivanka Trump did. She will go for one step further, expand a tax relief for up to $6,000 for a family with a newborn. That's funny. Yeah, okay. It basically, whatever is popular that Trump is doing, they're adopting. That's actually, it's like evil, but it's also brilliant from a campaign strategy. It's like, oh, wow. Okay. Yeah, not a lot of details here. I mean, basically what I'm seeing is antitrust. I'm seeing encourage builders to build starter homes and, maybe more regulation over price hikes. I think they're afraid of doing like a specific cap because they realize like if inflation's high, like you have to raise prices. But politically, like, oh yeah, we're just gonna block mergers. Okay. Yeah, interesting way to brand it. So Steve says genius that way. Yeah, I mean, it's crazy. It's that's a lot of money for cap. Oh well. Yeah, hey, if they have big incentives for building starter homes, I guess House Hack's going to start building a lot of starter homes. We got to get them Biden bucks. Or I guess we got to call them Harris bucks now. Although now apparently, like, it took me a really long time to figure this shirt out. I don't understand because I think I thought it was an apostrophe. And so I didn't get it until I Googled apostrophe law. Like, that's literally what I had to do, which I feel very embarrassed about this. But this is the shirt that I saw, and I'm like, apostrophe law? What a dumb shirt. and then I realized it's comma law. Oh my God, no. Oh, jeez. All right. Oh, I'm dying. Okay. All right. So, Q's down 48 bips. TLT's up a little. Let's go! United Wholesale Mortgage is up a little. Let's go! Oh, but Rockage is down. Damn it. Ubiquity. That's not open in pre-market. Chipotle's down a bit. It's just a little bit of a give back from yesterday is what it feels like right now. We'll see. You got Amazon Doodles over here. So yeah. All right. Well, 2 minutes-ish to go here. Oh, how's Ulta doing now that Buffett's all over it? Kevin, why the LSAT, not the MCAT? Yeah, or is that the next thing? Yes, Sam Lee. MCAT next. Wait, what? What is that? MCAT. I don't know. That's medical stuff, right? But is it an entrance exam or what is it? Medical college admissions test. Oh, it's an entrance exam. It is. Oh, that's really interesting. Oh, that's cool. That's next. Dr. Meet Kevin Esquire. Oh, that's funny.
And they've fallen on some kind of hard time. A lot of China dependency in there. That was part of the growth story that has faltered in all of those cases. We obviously saw what happened with Starbucks. Brian Nickel goes there. The stock pops. Nike,
what about
similar
CFA?
thing. So I don't think
Maybe. I don't know. I'd have to be convinced. Chartered financial analyst. I'm not opposed to it. But I like licenses that unlock your ability to do something. See, like, you're a doctor, you could do something. You're a lawyer, you could do something. You're a CFA, you get to brag that you have a certification, right? Like, you become an accountant, you can do something. You become a real estate agent, you can do something. You get FINRA licenses, you could do something. You get a Series 65, you could be a financial advisor. You see what I'm saying? Like, I like these practical tests where when I take a test and I pass it, I could do something. If I take a test just to go, look at me, I did this, it doesn't do much for me.
The market has had a very good multi-year run. Are we late cycle? In a lot of ways, it looks like maybe. And it's sort of, if you're an investor, if you're an activist, and your CEO or your stock hasn't really participated or done anything, it's kind of a, now or never. Or you have to, the low-hanging fruit has been picked. You have to shake the tree. Is the way I always think about it. Activists think about it.
We'll see. A lot of those discussions and strategies remain unresolved. Southwest has a big one. This fall is going to be interesting to see how some of the model boarding seats, boarding processes change the equation on load factor. Let's get the opening bell here and the CNBC Real-Time Exchange. And the big board, it's digital banking company Q2. And at the NASDAQ, it is Smokey Bear and the New York State Department of Environmental Conservation with the message of preventing human-caused wildfires. By the way, we are getting some haze this week in New York because of the smoke from Canada.
Friends in, of course, in California talking about the constant alerts that they're getting as well. So see if that has any, knock-on economic effects there.
As far as levels go, 55.30 here. Is the 50-day interesting to you? I mean, how much?
It's interesting that we shot right above it in a relatively quick way. I mean, it doesn't mean it's game over. Actually, the pullback we had back in April, you also did get 5 or 6% down, climbed right back above the 50-day, and then you had to fight out that battle for a little while. So it's interesting. I think the NASDAQ 100 is just at the 50-day. It hasn't really cleared it. So it's one of those benchmarks to say, okay, are we going past an obvious level where people might sell or take profits or consider resistance and not paying attention to it? That's probably net bullish if that's the case. You have some room to work here, though. The low intraday was just about 5,100 on Monday, the first Monday in the month, and so.
All right. Let's take a look. Amazon Doodle down about 43 basis points, but it's kind of not really going anywhere right now. Tesla's not really going anywhere, about negative 80 bips. TLT's up. Let's go. Got Q's up 41 basis points. Upstart's moving up. United Wholesale. There's like no volume on this sucker. Oh, Rocket Mortgage is green. Let's go. I'm only allowed to cheer what I like. SQQ up. Let's go. I'm just kidding. That's evil. I had to. Okay, Rocket Mortgage. Affirm. No, Home Depot's up 60 basis points. Affirm's up 35. Chipotle, 64. It's rising. Amazon's trying to rise. Tesla's trying to rise. Enphase is in no man's land right now between 113 and 119. Those lines were perfect again yesterday. Bitcoin just rotated down a bit more. Nvidia's trying. Palantizzle. Starbuck Dizzle. Alright. Portillo's! The hot dog brand! You want hot dog? That's awesome. Let's go in over here for a minute.
Bond yields haven't had as much of a move.
Yeah.
They didn't bounce that much. Now, it could just be, look, if the Fed's going to be cutting, the direction of surprise maybe is going to be weakness in the economy, not strength. It's just sort of not confirming in a vociferous way this move we've seen, celebrating the resilience of the economy from retail sales.
Right. You mentioned the carry trade. There are a couple pieces on the tape today looking at a bit of a comeback for that trade, given what's happened to the yen since August 5th.
Right. If you're just looking at the market clues and saying, well, it looks like people are willing to reload, sure, I guess that's the case. I tend to think it's usually not sort of the same snake that bites you twice in a way. You get really fixated on that dynamic, and certainly it hasn't gone back to where we thought it was. I was looking at I mean, this is real wonky, but the implied correlation index for the CBOE basically says how much are stocks moving together as one, or how much are they kind of doing their own thing. And they were at record lows in terms of correlation right before this shock, shot higher, and then we've receded back toward normal levels. Normal, not extreme lows. So, you know, I think we can sit here for a while and be fine as we await the next sort of macro turn.
You know, we were mentioning the China weakness and how it's impacted some bellwether retail names. It's also we mentioned AMAT and sort of their China mix, and the implied, I think the Wells desk today says it implies sequential decline of the China revenue. 24 would be the worst since we had some of those restrictions announced.
Definitely.
And the others on oil.
For
as
sure.
we got below 76 today.
Yes.
A lot of that's on
Tesla's about to go green.
deflation, pressuring steel, pressuring iron ore.
Exactly. And, you know, it's basically gold and every other commodity is going totally different directions. Gold driven by obviously its own dynamics. Yeah, AMAT.
Tesla's rocket shipping!
The open for the exchange. So it's in a way a similar story, you know, in the sense that, you know, China as the swing factor in terms of, you know, marginal demand, raw goods, and all the rest of it. I guess we're probably past the point of wishing for that disinflationary wave to help us out. You know, it seems like that the inflationary dynamics are more tame than they were for a while. But, you know, I think we've kind of done okay without it. That's the other piece of it. I mean, company by company, you're struggling. But in aggregate, it feels like we've stopped relying on that.
Right. Speaking of China, one company with a lot of exposure is Tesla.
Yeah.
And today, Bernstein, Tony Sacconaghi, reiterates his underperform, keeps his 120. His argument is they've lost share in all categories. And that loss has been most acute in North America.
Yes.
Tony would argue, and I'm sure will again in person, that the valuation here is getting further removed from the fundamentals.
Right. So if you're just doing the what's in front of us, you know, units times price and profitability, you can't really get to where the stock trades. And you never have been able to, at least not in the last few years. The plan, so to speak, was always that they were going to cede market share over time because they more or less had a quasi-monopoly on battery electric vehicles and everybody else was going to get involved. And so just the fact that they're no longer as dominant, I don't know if that's news, but it is stark when you look at the implications for the numbers and the reminder that there hasn't been a real refresh of the model slate very much, one that's taken hold. The pricing doesn't look as great relative to some others. You know, it was 177, the price around there in mid-June when shareholders backed the Musk compensation package, and the collective conclusion there was he's not leaving and we're fine. And so you still have to have some kind of assumptions in there trading above $200 for non-car businesses, obviously, and self-driving. And, you know, last week was supposed to be the event. Didn't happen. They forestalled it. And so, you're always in that zone with Tesla of how much value do you put on the what-if parts of this business down the road.
All right. A little media here. There is a double upgrade of Fox over at Wells. They argue deserves a premium to WBD. They're above consensus on 25 and 26 EBITDA. And then you got Paramount. And this Go Shop, which expires in just a couple days.
They always go back to talking about Paramount. I think it's so interesting. It's always Paramount. Yes. We have nothing to talk about. What are we going to talk about today? Paramount. Always this company. I don't know. I don't get it. But whatever. So, all right. So, let's see here. Next up, we have The Q's holding on to about the 41 bip dudes. Let's see here. Home Depot's up, Affirm's up. Oh, what else? What else? What else? Oh, Tesla rocketing a little bit. It's up about 61 bips right now. Amazon's still negative here. And Nvidia down about 40 bips. That's not actually that bad. It was down like 1.2% earlier, and so now it's doing pretty well. Let me get ooh, yeah, look at that Palantizzle. Palantizzle, nice. Nice move there. 31, almost up to 32 there. Very good. And it looks like, oh yeah, Tesla. Look at that. 70 basis points. Oh, going for a percent. Let's listen back. I want to listen to the Doomers. Let's listen to Doomers. Let's see what the Doomers have today. Ooh, Baba's up 4%. Tesla keeps going too. All right, let's try here.
To eke its way out into the, into the various parts of our economy and our markets. But still, we think, look, we have a 55-20 figure for this year end in the S&P, and that's where we're at right now. That argues for continued volatility on the downside, strength after the election, and we have a 6,000 target for next year. So a broadening of a slowing but still no recession is kind of our bottom line.
All right, Linda, that's a good place to leave it. Really appreciate you taking the time. That is Linda Dissel. She is Federated Hermes.
Did you say broadening of what?
Have a great weekend.
Broadening of slowing?
Now, coming up with Mpox being declared a health emergency, we speak to Dr. Seth Letterman. He is the CEO of Tomix Pharmaceuticals, which has a vaccine candidate for the virus. That conversation coming up next. This is Bloomberg.
All right. Iran news completely off the radio. Scary silence. Yeah, it kind of is, huh? Yeah. And Tesla's ripping. It's really going for about 221 right here is about the direction it goes. Okay. So, yeah, I'm just... Oh, that's what the kiss kiss gun gun means from Elon. It's the they actually changed the emoji back to a real gun rather than a squirt gun. Look at it here. You kind of have this little history lesson. Everybody, like, you had Revolver. Oh, I remember that one. Yeah, it was always Revolver. Then it went to Squirt Gun. Apple was the first. Then everybody made it a water gun. And now X is back. That's funny. Oh, that's interesting. It's sort of the counter trend, right? Very interesting. Okay. Qs are doing pretty well here. Gotta give them credit again. Q's only down about 28 basis points. Palantir's still up there at that 2%. Sherwin-Williams, you got TLT's up a bit. The mortgage companies are up, yay! Except for LDI. But they ran yesterday. Ooh, God, Tesla, look at that. 133. Next line, 221. And Enphase, Ulta, IWM's up 34 bips. Oh, Nvidia just went positive. Nice, Nvidia. Nice. Apple, what's Apple doing? It's a little stuck in the mud around 225. That's fine. And then Tesla really cranking here. So you've only had, what, 2 red candles since open? The rest has just been straight up. Okay. Let us switch the pages of the channel here. Let's see here.
Let's get to Bob Hassani this morning. Morning, Bob.
Good morning, Carl. So sort of a mixed open right now. Tech is lagging again, but that's sort of been the case for the third quarter. Interestingly, real estate and financials, particularly banks, are leading, and that's a very interesting phenomenon here. We are halfway through the third quarter right now, and I just wanted to give you a quick review of what's going on. I think it's very interesting that the leadership so far still remains the small caps. Despite that terrible week we had in small caps last week, the Russell 2000 up 4.3%, the S&P 500 equal weight up 3.7%, and they're outperforming the S&P 500. This is the first 6 weeks here. This is halfway through the third quarter. S&P's up 1.5%. The Nasdaq is down 1% here. So if you look at the leadership groups here, they're interest rate sensitive sectors so far. Real estate is leading. Utilities are leading. That makes some sense because we've seen interest rates trending down. And that's a good sign. Financials are also leading. And I mentioned banks as a leadership group here. It's good to see them rallying because, in a sense, they're interest rate sensitive, but they're also economically sensitive. So it's good that the financials are in the leadership category as well. And then we have some defensive sectors, consumer staples and healthcare, perhaps not terribly surprising. The laggards are growth and cyclical. So tech's been a real laggard. It's very interesting. Tech was the big story in the first half of the year, but not so much in the second half of the year. Energy is also a little bit down. Oil is lower this quarter. Perhaps that's understanding. And consumer discretionary and communication services are the big laggards, down almost 4% of communication services. And that's because Alphabet and Disney have been big laggards. They're so big that they've been dragging down that particular sector. Both of those stocks are down about 10% in the third quarter. So if you look at mega cap tech, with the exception of Apple, all mega cap tech stocks are essentially down a little bit here. NVIDIA, Microsoft, Amazon, Alphabet, as I mentioned, down about 11%. Meta's down about 6%. So big cap tech has not been the story, the major story, in the third quarter so far. And it's really remarkable. We're really dealing with two different months. July was fantastic, and August has been horribly choppy right now. As far as the earnings, which is what I follow very carefully, they're holding up very well. The third quarter expectations were up almost 6%. That's a little bit lower than it was a month and a half ago, but that's very typical as you finish the first month of the new quarter. They lower the numbers a little bit. The third quarter of last year was very, very strong, so the comparisons are difficult. So we're up about 6% in the third quarter. And the rest of the year, this is what I'm saying, they've not dropped the numbers, up 12, 13, 14% when you get into the fourth quarter, first quarter of next year, second quarter of next year, up 14%. Those numbers have been very, very stable over the last several months. So I guess, guys, what I look here, for me as the stocks guy looking at the earnings, is there a fundamental reason for the downturn that we saw last week? I don't particularly see it. I see inflation trending lower. I see cuts expected in interest rates. I see slowing growth, but no recession out there. And I see earnings holding up. Guys, there's a reason why the market's holding up very well, and most of the indicators.
Yeah, I don't know. I would just be careful because once you start, I mean, really the biggest concern is what happens with the potential for layoffs and more of them. That's where, like, what the early warning signs are, hey, our earnings per share is getting squeezed, right? That's like the early warning sign. Hey, earnings are getting squeezed. Wow, we're not growing anymore. So investors demand a return to growth. They punish the stocks. Stocks go down. Then what happens? Everybody's like, oh, we should really tighten the belt. Hey, maybe we could use this AI thing to lay people off and you know, basically make, you know, put more responsibilities on the people who are left. And then when people lose their jobs, you have fewer consumers. Fewer consumers, oopsie doopsie, the cycle of bad earnings gets worse. So I don't know. It's really interesting. We shall see. We shall see. Okay, good. So let's see what's going on the day here. So Palantir's got sort of a lid over here at this 32-ish level. It's actually, I mean, it's pretty impressive. It used to be 29.29, you know? So some good moves over here. You got the Qs. Qs aren't really going anywhere. Someone here says in the chat, Kyle Jackson says, companies seem like they already trimmed. They are running lean now. I don't know, man. I think they may have pruned around the edges, but I think running lean is very, very different than pruning. We'll see. What else here? Tesla bobbing around, Amazon bobbing around. Weird sort of setup today. It's kind of like, you know, BTC's got a little bit of the bleed going on. You got Nike that's got, it's up 30 basis points. You know, Tesla went from like -1.5 to +1.5. So really good positive upswing there. And Nvidia went from -1.5 to positive. But IWM capped out around a few minutes ago, maybe about 5 minutes ago. NASDAQ, I'd prefer to look at the Qs. Qs also capped out about 5 minutes ago. Can they go back and hit these lines again? Let's see. Starbucks bleeding a little bit. ARM bleeding a bit. Apps is up. Hood's up. Supermicro's up 1%. Okay. Sunrun's down 130. Okay. Somebody's asking, is the volume just... Oh, I can pop the volume. You mean the mic volume? You can always bump that a little bit. 30-year Treasury is up. Let's go. Okay. Cool. What else? Ubiquitizzle? 0. Somebody here says, I was paper trading for a class in high school right before the 08 crash. Every random stock I bought went up for months before cratering. Why does this market feel the same way? It does. It does feel that way. It's scary. I don't know why. It's probably just what we're hearing in earnings calls. Again, maybe it's the great normalization, you know? It's just a normalization, bro. Who knows? Alrighty. What happens if China buys all the gold? Oh, the Q's trying to recover right here. I think there'll be plenty of gold. Price will just go. Oh, look at that green candle right there on the Q's. Okay. So now let's listen into. They're all on commercial. Okay, let me go see what some of the suits are saying. Sometimes we get some entertainment from them. Let's find out. Blinken to arrive in Israel on Sunday. Oh, okay. Israeli foreign ministers have significant retaliatory strikes against Iran are expected if Iran decides to attack. Ooh. Okay, let's look at... Ooh. Q's moving. Gold right now is at 25.32. 10 years down 3 bips. Enphase is still in no man's land. Bitcoin's consolidating. And Nvidia just popped up over 123. Got a little line there for that one. Nice. All right. Fine then. What else? Let's see. All right, suits. Give me some news. Goolsby was yapping a little bit. And let me see what he had to say. I just wrote it down. Goolsby yappage. There are some various leading indicators of recession, and some of those are giving warning lights, but there are cross currents like rising delinquencies in credit cards, defaults in businesses. I guess you could also throw autos into that mix. But then, of course, you have pockets of strength. Historically, if the unemployment rate starts going up, if temporary employment numbers go negative, it's kind of a leading indicator. When things start to go wrong in the job market, they don't tend to do so at a slow basis. It tends to go up like a rocket and down like a feather in that space. Oh, that's basically talking about the unemployment rate. Got it.
Came out, and now we're looking very little change here, but still up bigly for the week. The NASDAQ 100 down about 0.3%, the Russell 2000 gaining The S&P has been on quite a tear this week since it had such a disappointing Monday last week. Then it was unchanged at the end of the week. Right now we're up 3.6% for the week.
And we do have, of course, some data coming at the top of the hour. University of Michigan sentiment coming out. Of course, we're moving on every single data point right now. It'll be interesting to see what happens. But it's time now for our Wall Street beat. Swedish fintech Klarna is setting the stage to be one of the biggest U.S. IPOs of 2025. The CEO joined Bloomberg earlier this morning about the company's future.
We're probably going to hit over $1 billion in revenue in the U.S. pretty soon. So, and that has obviously made sure that we are doubling down our efforts to accelerate rolling out new services in the U.S. as well. But especially when you talk about things like bank license, it does take some time, right? They took us a few years to get our European banking license, so we don't want to make the dependency on the IPO to that.
And for more on Klarna's growth and their plans, I'm thrilled to say we're joined now.
Klarna's like an Affirm competitor, buy now, pay later. It's interesting. Apple got out of it, and Apple now relies on Klarna and Affirm to do their BNPL work.
Wow, there's
Bored of this,
with Alex Steele.
With Alex Steele, yeah.
Oh, you're a lucky guy. Well, you have about 7 minutes, 6.5 minutes here. Tell us a little bit about Klarna and their plans. Does 2025 sound realistic?
I mean, it could be. When I talk to bankers, though, 2025 is kind of being chalked up to a lost year in the sense that you're coming out of the August lull. If you want to go...
Weird little 2-minute drop there on Bitcoin.
Kind of threading the needle between that and a U.S. election. Do you want to go right before Thanksgiving, or do you want to try to... Again, Thanksgiving this year is on November 28th, so when you look at the calendar, it's pretty choppy. So the bulk of activity when I talk to bankers and executives and investors is likely going to happen in the March to May timeframe next year.
So it's less likely, in your opinion, that they actually go in 2025, but they'll be big, right?
They're big.
I imagine if it's one of the biggest U.S. IPOs, that means it's going to be one of the biggest global IPOs.
It would be. We don't know what the logic or thinking could be, but right now we're seeing, and Bloomberg's reported, Klarna could target a valuation of $20 billion. So if you kind of slice and dice how many shares they offer and kind of what they want that float to be, that'll be interesting. But when you got to look at this company, you got to keep in mind, they did a funding round in 2022 at $6.7 billion. That was a sharp drop from $45.6 billion. So what this logic looks like, what the thinking looks like, what the messaging from the company and from bankers, kind of how that plays out when you, at least from a public investing standpoint, your best comp is Affirm, which is down more than 80% from its 2021 peak.
So we're going to continue to keep an eye on Klarna here, but let's talk a little bit more about the end of this year. Like you said, a lot of difficult needles to thread there between, all the holidays, the election, et cetera, et cetera. Is anyone else notable expected in the pipeline for the rest of this year?
We've reported names, the likes of a StubHub, the likes of an Ingram Micro. It's going to be interesting to see kind of what the receptivity is of investors when we get closer to potentially launching those IPOs, but it really feels like the others, the insurance names.
I mean, as long as you're not in a recession, I actually think people will love these.
Post-Labor Day window.
All right. Bailey, thanks very much for joining us. Look forward to your radio show from 10 to 12 on Bloomberg Radio with Alex Steele. I want to take a look at gold. Let's take a longer-term look at gold because the intraday chart is going to show you a little rise to 24.96. 2,500 is the level that it hit just a few minutes ago. And here's a one-year chart. This shows the incredible climb that we've seen in gold at a time when, especially in the last half of the year, when Bitcoin really didn't help during the Manic Monday, flash crash. Gold continued to remain steady.
There's your hedge right there.
Coming up in the next hour, Liz Ann Saunders joins us of Charles Schwab. We're also going to talk to Evite CEO Ann Defoe. Stick with us on Open Interest. This is Bloomberg.
Nice. All right, looks to me like Tesla's trying to go for the 221. I'm personally curious if it'll get rejected here at the same time as maybe the broader market takes some weekly profits going into the close. No guarantees, obviously, but great moves here by Tesla on the day. It will be interesting to see if it rejects here before it or which way we go. So far, there's a strong uptrend across the board here. You've got, what else here? Oh, look, even Upstart, it's almost at $40 now. I mean, when it reported earnings, it was 20. I mean, it's been like a double in the last few weeks here. So big move on Upstart. And here's, a lending company, but it's more of like debt consolidation and personal loans and referrals to lending. So really interesting because it's going to be have certainly more recessionary risk, but the market has been so enthused about, there's no recession risk. So interesting. You'll see, looks like we capped out on NVIDIA just under 124, now losing that 123 line on NVIDIA. And nice heavy red candle coming in there. BTC may have been somewhat of a leading indicator just maybe 10 minutes or so ago. Coming up on, 6 minutes ago. But that's already bouncing up. So I don't know if the market's going to go red today. It seems like so far, I mean, technically the Qs are red. The question is, are we going to consolidate or which way are we going to break? So let's run a poll. Let's see what y'all think. I'm curious. Let's run a poll on YouTube here. So we're going to add the YouTube poll. We're going to go, will market leg up or leg down? Leg up by close, leg down by close. Oh, Michigan comes out in 1 minute. You're right. All right. Well, that could be a little bit of an indicator too. Okay. So, but I mean, usually, I don't know. Is it really going to affect the market? I don't know. I mean, you'd have to have inflation expectations pop up. I don't think so. I think my guess is inflation expectations come in positive, which should be good for the market. Sentiment and current conditions come in low. My crystal ball guess. So anyway, make your vote or wait until after the data to vote if you want. 300 of you have already voted. All right, here we go. Data in 3, 2, 1, and a little bit higher on inflation expectations. 0.1 higher on the 1 year and the 5 to 10 year than expected. Not great. And then current conditions came in worse than expected at 60.9 versus the 61.3 that was being expected. And then sentiment, though, came in a little bit higher. Weird, though, because, like, inflation expectations up a little and the market's going green. This market's backwards. Oh, my gosh.
Hewing pretty close to the flat line. Dow's up 15.
Unless they haven't covered it yet and nobody knows about it yet. But, like, inflation expectations came in hotter than expected. They matched the prior, in fairness. They did match the prior, but no, as soon as that data came out, you got a big green candlestick on the Qs. That was not expected. I don't even think they're talking about it.
By almost 4%. The company also forecasts Q4 revenue above Wall Street estimates. It's expecting a surge in demand because of AI. Shares of H&R Block spiking this morning. The tax service beating on earnings and revenue, announcing a 17% dividend hike and a $1.5 billion buyback. Those shares up 7%.
Nobody's even talking about it. Yeah, inflation expectations anchored. You could argue that. Yeah, it's pretty close. I mean, yeah, it's not like it's like a skyrocket. You're probably right. That's probably what it is. Surprising. Yep. But, oh well. Okay, renewed soft landing hopes, rejuvenate smalls. Yeah, we did see smalls. They're still down a chunk. Oh, here we go. Look at that. It took like 2 minutes to get to this.
Expecting a number just a whisker below 67. We end up with 67.8. That's actually the best since just recently, good. June, of course. But what's very important here is last month at 66.4 was the weakest level going back all the way to November of 23. If we look at the current conditions, that's 60.9. That's about 3 points below what we were looking for. That's the weakest since Dec of 22, which matches the rearview mirror. 62.7 was also the weakest since December of 22. Now, if we move towards the expectations, what may lie ahead? 72.1. This is a better number. We're expecting a number around 68.5. That's the best number since April. And finally, the inflation numbers, and this is always important. 1 year inflation expected 2.8 is 2.9. Probably explains why rates have moved up just a bit. Now, that equals the rearview mirror, but 2.9 actually is good news. Even though we didn't make any progress, that level last month and this month is the lowest one-year inflation on this survey going back to D's of 2020. And finally,
there you go. It's the anchoring. I think you're right.
Very similar scenario. We were looking for 2.9, comes in at 3%. It matches 3% for last month, and 3% now. We have 1, 2, 3, 4 months in a row. If you go prior to that, the low for the year so far is 2.8. That was in March. These are preliminary, Mike and Carl, so in a couple weeks they may change. Back to you.
All right, Rick, thank you. Rick Santelli this morning. As we said, stocks a bit mixed here in some early action. S&P, NASDAQ on pace to break their 4-week losing streaks. Our Dom Chu's back at HQ with looking at some of the movers today. Morning, Dom.
All right, Carl, so the market action right now was more positive earlier on, but right now it could still be on pace for the best week we've seen so far this year in the stock market overall. Let's look at it from a market cap perspective. The large cap S&P 500 ETF, the small cap Russell 2000 ETF, and the mid cap ETF as well. So you can kind of see here relatively good across the board, but the large caps certainly outpacing what's been happening with that kind of mid cap side of things and a little bit better than the small cap. So on a weekly basis, very good. With regard to the sectors in focus in that larger S&P 500, as of right now, every single sector, all 11 of them on the week are higher, and notably the technology sector, the consumer discretionary sector, and the financial sector are the 3 best performing ones so far this week. For those people who look at that economic cyclicality in that trade, that does maybe perhaps bode well for where the momentum is. So tech, discretionary financials doing very well on the week. Stock-wise, this is where it gets interesting because the computer chips are still very much at the forefront on the one-week transaction basis in the S&P 500. Supermicro, NVIDIA, and Micron, 3 of the top 5 best-performing stocks in the S&P 500. That bodes well for that bigger tech trade, some say. We'll see if that momentum continues. And a couple of news-driven stocks this week have also been among the best performers. Check out shares of Starbucks on a CEO change. And, of course, Nike shares. Both of these stocks have been languishing on the consumer side of things. But Nike, after the disclosure of a big stake from Bill Ackman's Pershing Square, that is driving that stock up 11% for the week. So Starbucks and Nike, a couple of the big standouts. Contessa, I'll send things back over to you.
All right, Dom, thank you for that. We are getting some economic warnings this morning from Chicago Fed President Austin Goolsbee. Let's get right to Steve Leisman.
Oh, yeah, I covered some of those already.
Well, you know, in comments that sound like a Fed president who wants to cut interest rates, and maybe pretty soon, the Chicago Fed president warning in an interview this morning that the Fed has to be careful not to stay too tight for too long. Austin Goolsbee talking to NPR saying, quote, "You don't want to tighten any longer than you have to. And the reason you don't want to tighten is if you're afraid the economy is overheating. And this is not what an overheating economy looks like to me. We have had mixed signals when it comes to the economy. As you remember, the jobs and unemployment numbers were both weak. Housing this morning coming out weak. Jobless claims, however, have been moderate, not sending much of a warning signal there. And the retail sales were strong. All of that combining our CNBC rapid update before the housing came out. We're waiting for the new one. But before housing came out, it was compiled by Moody's at 2.4% for the third quarter. Well, the probability of a rate cut in September reflecting that uncertainty about the economy, 73% for a rate cut now in September and 27% for a 50, and that's because of that strength in the retail report. So with markets awaiting guidance next week from the Fed at their annual Jackson Hole Summit, Rich Clarida gave us some advice for how to think about the coming data.
But I do think that there is special importance in what we hear about the labor market. If the next print that we get early September looks like the average of the last several, I would be inclined to think that they go 25 and signal more in the way. If it's a disastrous report, negative payrolls and big resident unemployment, then we'll go 50. So I do think it's data dependent for that first move.
Okay, here's what the probabilities look like in the futures market. You saw that 73 for September, 59 for another 25 in November, and then pretty much 60%, a good number there, lots of confidence of another 50 coming in December for a total of 100 by the end of the year. Here's what's coming up that's going to determine all this. You got the Jackson Hole Powell speech next Friday. You got the PCE followed by about a week later than that. A week later from that, you got the jobs report. And then September 11th, the CPI en route to that mid-September meeting. So a lot of data to come that may answer the question is how weak or strong this economy really is, along with a lot of Fed speak, guys, next week out of Jackson Hole.
Not to mention some high-profile earnings like NVIDIA mixed in there as well, Steve. Stick around. Talk a bit more about the Fed's next steps and what it means for stocks. Let's bring in Crossmark Global Investment CEO and CIO Bob Dahl. Bob, happy Friday. Good to see you.
Same to you.
I know you argue that there's little evidence the economy is weakening, but that there is pressure on the central bank to ease. Explain how both can be true.
Well, I do think there's evidence the economy is weakening. The employment reports have been weakening. Inventories are building. We're seeing delinquencies move up. Credit card usage is moving up. They're all signs that we're starting to live on borrowed time. So I do think the Fed will get started, as you all have suggested, probably 25 in September, with a hint that there are more coming.
And Steve, do you think that gets telegraphed pretty plainly next week?
Yeah, I mean, I think on a top-line basis, that's right. I'm really interested, though, in this idea of risk management, which is one way that the Fed can run monetary policy, Carl. This idea that, look, we don't know if the economy's weak right now or weakening. It's okay here at 2.4% for the third quarter with a 1% retail sales number. But we may want to put ourselves in a position to address that weakness if it should come up. And the thing that's going to be on my mind next week is, how far do you think you are from neutral? How much can you give and still be restrictive, putting downward pressure on inflation that still remains, and yet be in a position to pretty easily provide stimulus for the economy if it turns out to be needed?
Bob, we obviously had this growth scare combined with some other sort of volatility catalysts in terms of positioning and all the rest of it, but still up pretty appreciably at the headline indexes for the year. Where do you think we sit here in terms of expected returns, in terms of whether earnings are going to be coming through to justify where we got to near the all-time highs?
Mike, a lot of cross currents, as you know. I agree with Steve that the Fed wants to signal there's more to come. I mean, think about the absolute number. They're over 5%. There are not many nominal data points that are at 5%. So they're restrictive in what they're trying to do here. In terms of the market, it's digested an incredible amount. You covered beginning of the last hour how the yen carry trade is pretty much behind us. There's a lot of evidence that quantitative and systematic managers are buying. Corporate buybacks have picked up. Earnings were good in the second quarter, but on the other hand, third quarter estimates at the margin have been cut some. So a lot of cross currents. In the meantime, you got to pay 23 times earnings for the S&P 500. Things better be really good at 23 times.
I think that's a fair way to put it. Is this, you look at all the company earnings calls and reports, and we're like, it doesn't seem like things are justifying some of the valuations that there are. But the thing is, maybe who cares? Market keeps going up, right? That's the play, so to speak. It just goes up, so who cares?
Jackson Hole.
All right, Mike, you're making me quote Yogi Berra, which is that making predictions is really hard, especially about the future. The fact is, the Fed has to have a forecast about where neutral is and where the economy is going and how best to position yourself from a risk management point for those predicted futures. Hey, it's probably going to get it wrong by at least some amount. It's already too high in its aggregate or median forecast for inflation for this year. It's too high. Inflation is coming in lower. And so what I think it has to do is say, okay, what I like to say is pick a neutral rate and go with it. Let's say it's around 3. And what Bob said is a really interesting way to think about it. There is nothing in the data that suggests neutral is 5. So you have some to play with. You could take 100 off and you'd sure be a lot closer to any perception of neutral than you would be if you stayed at 540. So that's an idea that's out there. I think it's why the market is minus 100 for the end of the year. And actually, if you look further down the curve, it's minus 200 for next year. Where does that get you? 340 in a year's time, still above the neutral rate. That is, according to that theoretical construction, still restricting the economy a year from now.
Well, we're going to buckle up for next week and certainly next Friday with your help, Steve, as we look forward to Jackson Hole. Bob, as always, appreciate your guidance.
J-Hole is going to be fun. I just looked up some Yogi Bear quotes because I thought it was funny. Let's take a look at this. Always go to other people's funerals. Otherwise, they won't come to yours. Okay. Interesting, given that, they're if they're dead, they're not going to come anyway. A nickel isn't worth a dime today. Even Napoleon had his Watergate. Here's a big clog in their machine. If people don't want to come out to the ballpark, nobody's going to stop that. I don't know, some of these. Okay. If the world were perfect, it wouldn't be. Okay, interesting. In other words, somebody would find something wrong. If you can't imitate him, don't copy him. Okay. Some of them I don't understand too well. I gotta actually put some thought into them. If you come to a fork in the road, take it. Okay. In other words, I mean, this kind of means don't turn back. If you don't know where you're going, you might not get there. It ain't over till it's over. It gets late. It gets late early out there. Okay. It's hard to make predictions, especially about the future. It was impossible to get a conversation going. Everybody was talking too much. They're like little ironies. Nostalgia isn't what it used to be. I get it. Okay, it's just it's the little ironies in the phrase. Nobody goes there anymore. It's too crowded, right? The irony in the phrase. I get it. The future ain't what it used to be. The future ain't the past. And this is like deja vu all over again. You can observe a lot by watching. Or like little does. You guys wouldn't have won if we had beaten you. Duh. Well, I used to look like this when I was young, and now I still do. Okay. All right. Somebody says boomer humor. Oh. Oh, no. All right, so anyway, we got, as usual, we got data in the market rocketed up. Wow. Okay. So good for it, I guess. Then you've got, what else is going up? You got, Rocket Mortgage had a little rocket ship. It looks like that rocket ship is slowed a little bit, though. Wholesale Mortgage had a little bit of a move. Qs are holding on to like 10 basis points. They might go positive. And Space Mobile, I don't know what happened there. Somebody took some weekend profit taking. That's what happened there. You know, personally, I think this 221 line is still in play on Tesla. So I don't know where it's going to get rejected, but wouldn't be surprised to see it get rejected. Then you've got, which is a good level, you know, compared to the 197 you were at not that long ago. So Palantir, well, Palantir's doing Palantir things. Look at that. Almost up 2.5%. That's pretty good. Then you've got QQQ. Gave up a lot of the gains that it had today. TLT's still up. 26 points. Affirm, Upstart, Ubiquity, Chipotle. Apple just went positive. Enphase is about to go positive. Amazon was negative. It's about to go positive. Ulta still catching the Buffett buy. Nike. Bitcoin's kind of consolidating. Well, stuff's all over the place. But it seems like the trajectory is up at the moment. You know what was weird is what we had on Wednesday. Oh, yeah, look at the Qs. Just legged higher again. You know, Wednesday was crazy because you had, was that the 13th? No, it was here. It was this day. Here, I guess it doesn't look that crazy on the Qs. I just remember there were some like really wild swings on NVIDIA and Tesla right before your retail sales number. And then everything just rocketed. And the Qs are about to go positive.
Gain the lead.
So very well. All right, what else here? What else? Nice big green candle there on Tesla. I mean, it's just been a big move up. And Qs, lost lead again. Oh, Disney's negative. All right. What is this? State of housing? Let's give them a listen.
Yeah, so the interesting thing is I was having lunch yesterday with a mortgage broker from New England who said she has just been inundated with client requests for her services on mortgages. So where's that activity coming from?
It's refinancing of people that took a mortgage after, say, the 1st of July in 2022, when the Fed started tightening pretty significantly and mortgage rates went up very rapidly. So anybody that has taken out a mortgage since that time period may well be in a position to refinance. And we actually track that. We have what we call the rally, the refinance application level index. That is a measure of the flow of application activity. And in the last 2 months, as rates have come back down, you've seen, or 2 weeks, I'm sorry, there's been a big jump in the applications for refinancing.
So according to the notes that I got from you guys, here you've got the conforming loan balances falling slightly to 6.54%. I mean, it's down like 1/100%. It's basically flat. But are these tiny moves enough after seeing interest rates high for this period of time? Is that enough to get people who've been chomping at the bit to say, fine, I'm just going to go ahead and do it now? Are you seeing that?
Well, if you go back 30 days or so ago, you would have seen rates up closer to 7%. So dropping 50 basis points, a pretty big drop, and will bring a bunch of people into the market. And if the Fed...
Yeah, just watch the 10-year. The 10-year Treasury kind of predicts the 30-year mortgage, ironically.
Continue to pick up. Bearing in mind that 2021 and the first half of 2022 were very high levels of refinancing themselves, and those folks won't be back in the market for a while.
Doug, you mentioned that mortgage rates don't move in lockstep with, say, the 10-year Treasury yield, but it seems the gap is higher than historically it has been on average. There's a lot of factors, I guess, behind that, but some of that is about assumptions about, prepayments and refinancings, or maybe just sort of bank willingness to get into the market. What do you think is driving it, and what can we expect?
Well, those things that you mentioned are part of it. Part of it, too, is the Fed's portfolio. They are still the single biggest holder of mortgage-backed securities.
Look at that sell down on Space Mobile. It's down now 5%. I thought it was up like 12% or something, or 14 or 15% there on the day for a moment. So I don't know if there's just like some profit taking running into the day or what, but anyway.
So there's that uncertainty about who will step in and at what rate. And of course, as you mentioned, at the same time as rates are coming down, it changes the probabilities of people refinancing existing mortgages. And that is a risk. And so that means spreads will stay wider to account for that additional risk.
Doug, finally, have you been able to take a look at any of these reports about the vice president's plan that we might hear about later today, specifically offering down payment support to first-time home buyers? If it were to become reality, how much is policy loaded to make a difference here?
Well, we don't really comment on specific platforms, but if you think about the fundamentals of supply and demand, the issue in the market today is the lack of supply relative to demand. So it's the reason why, even though the level of activity has fallen off, house prices are still going up, is because there is still a great latent strength in the demand side, and the supply side of the equation has not caught up to that. I would caution one note about the interpretation of the data that came out this morning on construction. That downturn was heavily concentrated in the South, and Texas is in the South and is the biggest market of home construction, and a Hurricane Beryl went through there to shut down starts for part of that, we think.
I wonder if they adjusted for that. But yeah, it's interesting. I don't actually like buying real estate where your state is known for being the easiest to build. It actually makes it very unfortunate to buy old fixer-uppers and try to remodel them, because everybody could just go buy new construction.
Check out some of the biggest gainers on the Dow for the week. We're back in 2.
All right, interesting. All right, well, Qs are basically holding on to 0. And what else? Qs got 0. TLT, Tesla's up 1.8. You've got Upstart's up. Chipotle actually went back down 1%. Apple just turned negative. Nvidia's up 1.5%. Wow, it broke out again, going up to 125. Meta's down. Interesting. Yeah, look at quite a few of these turning red here. So Microsoft legging down a little bit. The Qs are really just bobbing around flat. I personally just wonder, is there going to be profit taking going into the weekend? But then you're really just leading into J-hole next week. But I mean, Fed catalysts get traded. Supermicro's not seeing selling. Intel's not seeing selling. PayPal, Coke, Portillos. Oh, Portillo. And what else? Disney's still neg. Yeah, Disney down a bit. Bitcoin can't keep it up today, huh? I mean, you had a run earlier in the morning. Yeah, this is where we started. So you're definitely above where we started. And the Qs were down 40 bips. Now you're turning positive. All right. Let's see if there's any other news to cover. Let's see here. UMISH doesn't change a whole lot. Yep. Gold rally likely to slow following record high, it says. Ooh. S&P is poised for another great week. Yeah, that's true. All right. That's pretty basic. Doesn't seem like any major news there. Somebody says Palantir, Kevin. Okay. Oh, wow. Look at it. It's at 3% of dudes now. Nice. Is this thing going to 35? Look at that. What a run there on Palantir. Really impressive. You legged up, and you just keep going here. It's almost like people are taking money from the Qs and Tesla and tossing it into Palantir. You finally have a little bit of a topping on Tesla there. It almost makes you wonder if you're going to form a little bit of a head and shoulders pattern here. All right. Head, shoulder, knees and toes. I'm just kidding. All right. What else? Palantir. Okay. Let me see if they have anything last minute. Otherwise, we'll head on over to the course live.
Of some Medicare drugs, but the company's downplaying the long-term impact for now. Angelica Peebles joins us now to explain. Morning, Angelica.
Morning.
Peebles.
Yeah, the Biden administration is touting these huge discounts, but most of these drugs are already coming with big discounts. And only 2 of these 10 prices actually represent significant cuts from their current net prices. AbbVie's cancer drug Imbruvica and Novartis's heart failure medication Entresto. And that's according to SSR Health, a provider of net price data for U.S. prescription brands. And these first 10 drugs are older names that are becoming less important to these companies. Some of them will face generic competition by the time these prices take effect in 2026. But it's really important to know that this is only the beginning. More drugs will get added to this list every year, and by the time we get to 2030, there will be 60 drugs that Medicare can negotiate the prices of. And as this list grows, you're going to see newer medicines that are still really important to these companies. One to watch is Ozempic. A lot of analysts expect that drug to be on the list in the next round. Then in 2028, drugs that are given in doctors' offices will also be included. That means cancer drugs like Merck's Keytruda could make the list. Now, this is important because these medicines don't currently come with big discounts like these initial drugs do. So those percentages...
Yeah, all right. Okay, so let's see. Anything else? I think that's about it. So head on over to the course live. This looks like, Space Mobile's trying to come back a little here. Qs are really, they want to hold on. They don't want to give up these levels, which is basically flat. And Palantir is still holding on to its 3%. Yeah. All right. Question here. The comments I see. What do we think about lack of capex for Ubiquity? Yeah, it's not ideal. Ooh, Baba's up 5%. Look at that. Holy Baba. Welcome to the Baba Hotel and Casino. Yeah, look at that. It's pretty good. 5% on Baba. Wow. And somebody's saying Kathy's Arc. It's up about like 39 bips. Okay, very well. There you have it. Thank you so much for being here. Let's push El Button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Apple turned negative again. Weird. He had a nice little rally there, and everything just sort of felt like it's like the 10 o'clock kind of lid. 10 o'clock lidding. Yeah, we'll see. Oh, no, Q's trying to come back. All right, very well. You can get some coffee. See you soon, folks. Bye.